Are you clutching at straws trying to make the right investment decision? Are you a teenager who has no idea about the stock market? Well, it would be hard to decide during this pandemic where the markets are, as they seem to be responding like a roller coaster ride. The temptation of big bucks has always thrown investors into the lap of stock markets. Stock markets have always grasped the investor's hand at inflation-beating returns and wealth generation. But it's a known fact that making money is not that straightforward. What it requires has to be cultivated. Maybe it requires a ton of patience, well, maybe more than a ton, and some in-depth research and analysis. Hey go-getters, welcome back to The Early Investors, another profitable episode where you can learn how to become financially free. In today's video, we'll be showing you how to invest in stocks if you are a beginner. Want to become the next Warren Buffett? Stay with me to find out all the tips and tricks to save your hard-earned simoleons. Before we jump into the video, make sure to subscribe to our channel for more business-related content. It's a known fact that making money is not that straightforward. What it requires has to be cultivated. Maybe it requires a ton of patience. Well, maybe more than a ton. A thorough knowledge of the track of the market functions and some in-depth research and analysis. Alright, let's get back to what we were talking about. You may wonder what emotions are in play in an investment. Investing based on emotions such as greed, fear, anxiety, and overconfidence is the typical reason why major investors are purchasing at market tops and selling at market bottoms. But learn to check up your emotions and it will aid you in all your life, not just in the stock market. People are even more hesitant to enter this investment area with the constant, endless news of the stock market's fall. But is their fear justified? Indeed, it may be these emotions that really separate the average investors from the brilliant investors. Most investors feel cherished when they find that their stocks are growing up. But trust us, stakeholders, that there are investors who are actually joyful when their stocks go down. Because this means that they can build up the mindset that they can grab onto more stocks at a lower price. Well, a quality investor knew that the lower their price, the higher their returns could be. It isn't the timing of the market, but rather time in the market. Keep in mind, it's time. Generally, there are two types of markets. The term bull or bear are often used to explain market situations. These are used to explain how stock markets are going in general, i.e. whether they are appreciating or depreciating. You may see that the terms are mild, but their causes are incredibly complex. Although the direction of stock prices marks a bull market or a bear market condition, there are some accompanying characteristics that investors should be aware of. Before you make any decision, consider your areas of importance. If you want to outsmart other investors and strive forward, you will have to assess where you stand. Analyzing and studying how to invest in stocks takes some time and energy, as any worthwhile skills take. Trusting the payoff can change your life. So start with the basics, and gradually improve your investing skills over time. If you are a teenager, you would probably go behind gaming, artificial intelligence, social media, and other technology businesses. Still, if you are older, you would probably grab hospitality, travel, wine, or food, or something mature. If you are a master brain when it comes to gaming or artificial intelligence, then you will probably have a good idea of what countries will lead into the future, and what industries will take off. Well, you have probably heard of Berkshire Hathaway. If you haven't, well, it might be time to put your hard-working brain switch to on. He only sticks to those mature business models that he knows well. He sells Coca-Cola. He has confessed to drinking as many 5 Cokes on an average day. Sees candies. He has quite the sweet tooth. McDonald's. He has even memorized the menu and the prices. If we look from every angle, Warren Buffett's favorite things have fastened him to become rich. Buffett has managed to combine his hobby he relishes most with his career, and the effects speak for themselves. Now, we would love to hear your words. What things in life do you love? Is that the type of thing you can invest in? Leave a comment below with your answer. When you invest in elements that you like, understand, or are passionate about, the entire investing process is just uncomplicated, making it easier for you to steer through numerous decisions made along the process. For years now, there has been a battle of sorts molding between two forms of analysis in this world. Well, the battle is between quantitative versus qualitative forms of investing. If you dive deeper, one will find that the fight is between a great teacher's style of investing and his students. Quantitative analysts and investors scan through the company's financial numbers and the company's valuation history over a period of time. They are not bothered by the price of a company but look at its value. But things are different in the qualitative analysis path. They do have a glance at historic numbers but make their decisions based on ground checks. A qualitative analyst does an in-depth study of the products and compares them with competitive products in the market. Well, there is something called passive income in the game plan. It would be as easy as ABC and sipping your favorite mojitos to think of passive income as money earned. But there is lots of work involved. A lot of training and an upfront investment is required in the beginning. Later, this hard work helps you to mold or manage to maintain themselves, bringing you consistent revenue without much effort on your part. Well, most of us have misunderstood this phrase. To make it simple and facile, let me explain. When you're grabbing stocks, some give you the option to pay dividends. Various companies will pay you for investing in them every year, or there are some companies that do it quarterly. It depends on the company. Some companies even pay every 6 months or annually. But you will get an absolutely superb dividend because your share can still be going up in value. Next, knowing about the stock markets is also crucial. Suppose you investigated or analyzed a graph. It would show you that at the early to middle stages of the cycle, the transportation, technology, and capital goods stocks tend to grow well. Well, you have the answer to that. Things are probably starting to expand as the economy is starting to heat up. Transportation has become crucial. Technology, if you have managed to invest in Netflix, Tesla, Amazon in the last 10 years, was the time to do so just when the stock market started to heat up. If you analyze it now or during the later stages of the cycle, consumer, non-cyclical, and healthcare is taking up the growth. We don't have to answer that, right? People still need to eat. They need toothpaste, soap, and clean water even in a market downturn. You have understood by now, I hope, that these consumer, non-cyclical investments are safer to own, and everybody wants their health taken care of. So, healthcare stocks also work well. You need to start getting your head around these things because you are just a beginner in this industry. The stock market isn't like your grocery store. While stock investments can help you generate capital, it requires time and effort to evolve from an amateur into a successful investor. Young and slow, keep in check the risks and slowly ease yourself into this world. Well, fear and fright have no good roles in this investment world. With all our basics packed, start your perfect happy beginnings investment. Keep discovering to keep developing. The stock market is a vibrant place and varies continually. If you want to keep up with the changing stock market, you have to continue your education. To be crystal clear that the purpose of any investor is to purchase low and sell high. Remember that stock investing is not betting. You are not trying for any risk-taking chances, but are instead trying to make some brilliant decisions. So, investors, keep all your thoughts and mold them into an experienced investor with age. That's a wrap to the video. Here's hoping that these free share market tips help you in your journey. We are damn sure that today we helped you to make some shrewd decisions. But before you make a move, don't forget the 5-second exercise to smash that thumbs up button if you enjoyed the video. Bye bye, investors.